Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 3rd of August. All right, now, as expected, not a lot of activity. Well, actually, I didn't think it would be, it could just be Monday, but I was going to say the ISM manufacturing numbers out of the US had a bit of a chance to get the dollar rumbling a bit, but no major variance there, and it hasn't really done a lot. So let me just flip over to the chart so you can see here just on this main screen, the dollar index just trading sideways. Pretty much tells me against the basket of currencies, it's generally just cruising sideways. Now, technically, as you can see, I've just sort of zoomed these charts in a little bit. Not much trading activity going on. Dollar Swiss is still got an inkling to go lower by the looks of things. Dollar yen, just a little bit of a drift down through 109, sort of 45 support. It's not major. There's no major moves happening here at the moment. Dollar CAD pretty much following the dollar index, as is the price action on most of these pairs, right? Aussie coming back a little bit. It's overdone on the downside though. I mentioned that yesterday. Aussie was down like over 2% for the month, right, compared to some of these other currencies. So just keep an eye on that. It's just out of whack with the other currencies, and we may see some like a retracement or the other currencies drop lower and it doesn't move too much. But the Kiwi also not doing a lot. Now, so what are you going to do at this point? Well, coming into the end of Monday in North America, okay, the markets have had time to reconnect. There isn't a lot just yet to focus on, right? So what are we focusing on? Well, actually, let's come back over to the news first of all. You just want to keep an eye on what's happening. Like usually on Mondays, you get a bit of a summary of what happened at the end of last week, what's coming up and all this sort of stuff. Now we've got the Bank of England, we've got the RBA today, and then we'll start to piece together the rest of the data around those central bank meetings. But there's not a lot of other activity going on. So when you come back to working out, well, what pair should I look at, right? Obviously looking at technically which pairs have the best technical setup, then start to come in and have a look around what's coming out. Now, the major focus that I can see over the next, 24 hours is the obviously RBA. Okay. Now, central bank, the RBA hasn't suggested they're doing anything. Australia's in a massive lockdown situation, so I can't see them coming out with any progressive communication or forward guidance, right? There's no change of rates expected, no change in their forward guidance. That they need to see the economy reopen, then start to work. So the only thing I can see there is like a bit of a dovish situation. That's maybe why the Aussie's so much lower and down 2%, is because of the lockdowns. Economic growth is stagnated or dropping. We may see the RBA come out with some more plans about, doing something. Okay, but that's probably already factored into the market. Now, outside of that, producer prices out of Europe. I'm not going to hold my breath for that. That's neither here nor there. So what we've really got to do is just focus on what you can see and where the activity is. As I said, any central bank meeting is important, so make sure you have a look at that. We've got US factory orders coming out. Now, it's not a massive number, but it is, I'd say, second tier number. And that's pretty much all we have for the day. Equity markets, look how interested the market is. Nothing really going on there, right? So at the moment, US equity futures, I mean, we're seeing tiny moves because the market isn't confident with where momentum is. When it comes back to the charts, of course, we can see the US dollars just drifted lower here after the Fed last week, but that's all she wrote. Now, these currencies have got that factored in. They are now where the market is factored in that sort of sentiment from the Fed. We need more information now. That's where the data comes in. And keep an eye on the central banks. As I said, in the past, we've seen surprises from the RBNZ, the Bank of Canada. Now, they had economic numbers working for them. The RBA doesn't mean we don't expect a surprise, but on like a 1% surprise chance that the RBA says something that moves the market, right? As I said, if anything, probably bearish sentiment would be the way to go at this point. And that's all you've got, guys. Nothing else. You can't make these markets move. They'll move when they're ready. That's why we're looking at the markets. Have a quick analysis. I can't see a terrible lot to get excited about today. It doesn't mean nothing happens, but it just doesn't mean that we can see the market acting uniformly, right? Because if they're sporadic, random events, well, you will see movements, but we can't predict them. If we can't predict them, we haven't got entries, well, there's not many trading opportunities. Just hold your horses. This week is going to be all about the non-farm payrolls on Friday. As you get through sort of into Wednesday, you'll see the news pages light up with all the expectations around what strong or weak non-farm payrolls does for the US dollar. And that's where the activity will come together. All right, guys, good to be back. All the best. Cheerio.